the syllabus point of view, we are going to have the nature, purpose, and sources of management information. We are going to have the data analysis and statistical technique. We are going to have cost accounting technique. We'll have the budgeting, standard costing, and then performance measurement. Right. So if I talk about, this is the main area of, as far as your syllabus is concerned, these 6 topics we are going to cover up them over here, right? And we are going to individually pick one area of the syllabus, and then we are going to go into its depth as well, and then we are going to cover it up. Right now, if we talk about from the exam format point of view, the syllabus is assessed by 2 hours computer-based examination, right? Questions will assess all part of the syllabus and will test the knowledge and some comprehension or application of this knowledge as well. The examination will consist of 2 sections. Section A with 35 2 marks objective test questions, the OT questions, and the section B is going to contain 3 10-mark multitask questions, that is the MTQs, each of will examine the budgeting, standard costing, and performance measurement. So technically, the budgeting, standard costing, and performance measurement, these are explicitly going to be in section B, and then this whole area can be in section A as well, right? I mean, we can have the questions from budgeting, standard costing, and performance measurement into the section A as well. But in section B, where we are going to have the multitask questions, over there you are going to have the questions from the budgeting, standard costing, and performance measurement. Technically, we are going to have 3 questions. So one question is gonna be from the budgeting, one most probably from the standard costing, and one from the performance measurement. I mean, if we want to segregate it like that. Normally, the examiner might give you a question or a mixed question where is asking about the standard costing, the performance measurement, and the budgeting into the same question as well, right? So this is technically the examiner can do so, right? Now, what we have to note is the budgeting MTUs in the section B can also include the task from B2, that is the analytical techniques in the budgeting and the forecasting as well. So technically, in the budgeting question, see, this is what it's writing over here, that the analytical techniques that you have over here, these one, right? They can be applied over here into the budgeting and the forecasting as well. And then obviously the spreadsheets could be included in any of the MTQs as well. So we might have to use the spreadsheet, or we might be asked about the formulas to be used in the spreadsheets, or the way we are using the spreadsheet into the budgeting section as well. Like for example, you may be provided with in a question with a picture of an Excel or a spreadsheet where the certain formulas are being written or certain values are written, and the examiner might ask you for a specific formula which we can put into the relevant cell for the calculations and all, right? If you're finding it difficulty to understand that what the Excel is or what the spreadsheet is or how we are going to use it or something, don't worry about that. We are going to cover it up over here. We are going to talk about over it as well, right? And we will do the practice of these questions as well, where you might have the questions from the spreadsheet into the budgeting. So I will let you know that how to tackle such questions, okay? Don't worry about that. It will be taken care of. Now, the point is basically all you have to think right now is how the paper is going to be. Okay. 6 areas. First 3 areas definitely into the section A, right? No matter what, they are only going to be in section A. Then the section B area, the last 3, the budgeting, standard costing, and performance measurement, they can be in the section A as well. Otherwise, they are the favorite area for as far as the section B is concerned, right? Normally, if I write it down over here, say in case in section A, we have 35 questions of 2 marks. So technically, that's going to be 70 marks over here. And then in section B, we are going to have 3 questions of 10 marks each, and that's going to be 30 marks. And these 3 questions, they are going to be 5 MCQs, most probably, of 2 marks each. That is what makes it for the 10-mark question over here, right? And then the total is 100, and obviously the passing is 50% over here, right? So this is what the whole structure for as far as the paper is concerned. Done? Now, if we move ahead from here and if we talk about from the types of accounting. Types of accounting, we have one type called as the financial accounting, and one type is called as the management accounting, right? We have these 2 types of accounting basically with us. Now, we can also segregate it like this, that if we have the financial accounting, it is the recording, summarizing, and presentation of financial transactions to produce the financial information, right? What is a financial accounting? It is the recording, summarizing, and presentation of financial transactions to produce the financial information. Then we have the management accounting. Management accounting is the preparation of financial and non-financial information to support management activities, right? And then we have cost accounting as well. Cost accounting basically focuses on cost, right? Cost accounting, it focuses on cost. Management accounting is where the information is related to the financial and non-financial information for the management activity or the management decision making. Whereas in cost accounting, it focuses on the cost, focuses on resource allocation and their relevant cost. It is a sub function of management accounting, right? So technically, if I say that this management accounting is something, you must have heard its name as the cost and management accounting or management and cost accounting, right? So that is how, interchangeably we can use the words over here, right? One is called as the management accounting or the management of the cost accounting, and one is the financial accounting. So technically, if we have to communicate outside the organization, we normally use the financial accounting, because over here we are presenting the information in a summarized form. We are presenting the information in a standard form. We are presenting the information over here via the use of the accounting standards. Over here, the information is presented via a standard way, right? So these all things over here, if we talk about the standard over here, this is related to what the financial accounting is. But if we go towards the management accounting is more about the detailed analysis. It's more about the bespoke information as and when required. There are no accounting standards over here. They have a detailed information over here. Management accounting is used for in-house communication, right? So these are the stuff that we have for the management accounting when we compare it with the financial one, right? In financial accounting, we simply report in our financial statements that what the profit or loss for the period is. What are the total sales for the year? What is the total cost? Or what has been the profit for the year, right? Done. This is the standard summarized information that we have in the financial accounting. But when it comes towards the management accounting, our line manager may ask us to prepare a report for, like, the detailed analysis of the sales that we had. Like, for example, if you are a local company or local based, business where you are having the transaction locally only, your manager might ask you to give you the analysis of, say, in case, how many of the sales you have been able to do, in the north region, how much of the sales were for the south region, similarly for the eastern and the western region as well. Similarly, if you have multiple products, your line manager may ask you to present the information from according to, the product point of view, right? From the product point of view, that's in case, how much of the sales is the share for, the product A, or how much in the total sales is a share of the product B. Or if you launched a new product, the examiner, sorry, not the examiner, but your line manager may ask you to present him with the information that how much of the sales have been achieved related to the new product. See, similarly, we can take up an example of a chair as well. Say, in case, say that if you are into the furniture business or something, and you are manufacturing the chairs or something. So, in the financial accounting, the information that we have to present is that simply, what is the cost of the chair. Like, for example, you manufacture the chair for like around 1000 Mauritian rupee assumption. Let's just say assumption, you spend 1000 Mauritian rupee and you manufacture the chair, and then you sell the chair for 1500. So technically, at the end of the day, you are making a profit of 500 Mauritian rupee per chair. So in financial accounting, you just say that we made a chair, or we manufactured a chair for 1000, which is sold for 1500, and we are getting a profit of 500. But when it comes towards the management accounting, the questions are going to be, how are you making the chair for 1000? Why are you selling it for 1500? Why not 1600? Why not 1400? The answer is, it might be the policy of the management to have a 20% or 25% or 50% of the profit share or the markup. I mean, it can be the policy of the management that we charge the markup of 25% on the cost that it incurs, or the 20% of the markup on the cost that we incur while manufacturing a product, right? There can be the case. Similarly, we can have the breakup of the cost over here as well, that how you made the chair for 1000. Like, what is the cost of the material? What is the cost of the labor? What is the cost of the conversion? What about the some other overhead costs that if you are having or something, right? I mean, say in case the chair on which you are sitting at the moment over there as well, maybe it will be having some cloth on it. It can have a foam in it as well. It can have some, plastic material in it as well. It might be having some wood in it as well. It has an iron frame in it, is in it as well. Then it might have the wheels, right? So all of these are the materials. Similarly, a tailor would have been required to stitch the cloth. A carpenter might have been required, the services of the carpenter might have been required for the carpenting stuff, like for the woodwork or something. Similarly, an assembler would have been required for the assembly purpose and all, right? So the labor is over there, so other expenses are over there. So see how in detail we are going at the end of the day. See how in detail we are going in at the end of the day over here, right? So, this is what basically the detailed analysis is. Similarly, we have so many companies around us where we find the example of the detailed analysis. Like, for example, You might have heard of a shoe company called as Bata, right? It's an international company, but over here in Pakistan, if we talk about the Bata, like, they are the footwear manufacturers, mostly or more, they are into the footwear manufacturing. Right now, let me just give you the example of how much of the detailed analysis can be there. If you take a, pick up any shoe that you have around you, right? And if you try to zoom the shoe, you will see that there is a stitching of the thread in the shoe or in any sleeper or whatever the footwear you have, right? When you zoom, you will see how the stitching pattern is. I mean, the thread is coming out and then it's going in, then it's coming out and then it's going in. I mean, if you try to zoom it up. Now, look at the example of the detailed analysis that we have. Bata has calculated that what is the cost of this one stitch. This one thread is coming up, then in going down. Bata has calculated that what is the cost of this one stitch to them, right? They have calculated that. This is what basically the detailed analysis is. But overall, do they need to share this information outside the organization? I mean, they don't have to. Or the user outside is not interested that what are you incurring the cost. Mostly the user outsides are interested in what are the costs, what are the revenues, what are the profits, what are the returns, what are the payments, what are the receipts. That's it, right? I mean, I have some shares in a local telecommunication company, right? Now, I I literally don't know how the telecommunication services are working. I mean, if some person is standing up high on some pole or something, having a dish in his hand, pointing out towards at my home so that I can get a signal or something, or maybe at some high building, the towers are being installed and how the towers are working. I'm least concerned. I'm least bothered. All I'm concerned is that I should get the service, right? And if I've invested the money, I should get the return at the end of the day. How they work, how they don't work, I don't care. I don't care. I don't want to know because that's none of my business. That's none of my concern. All I'm concerned is what they are giving me at the end of the day because I'm outside the organization. But if I come in from the management accounting point of view, I need to look what they are doing. I need to plan about my cost. I need to plan about what I have to do in order to get more out of it or something, right? So this is what basically the management accounting are going to do or the management accountants do. They do the planning along with the cost. They do the planning that what we can do at the end of the day to maximize the profit for the shareholders or to maximize the wealth of the shareholder. What we can do to twist and turn our operations in a way that we get more profitable and all, right? So this is what the management accounting is going to be, right? So this is what basically their role is going to be over here, right? Then moving ahead from here, I have this one structural data flow over here for as far as the cost and management accounting over here. Like for example, we have the types of accounting we just talked about. Now, we have some features of useful information that is the characteristics, they have to be accurate. Then we have the information sources and categories. I mean, we have some internal and external sources. We have the data capture cost, data information as well. So now we are going to have this whole thing with us, right? What's the big data, what are the limitations, and this the planning, control, and decision making as well, right? This is the primary area, the planning, control, and decision making, the primary area for as far as the management accountants are concerned, right? This is the basic major area for as far as the management accounts are concerned because they are more into the planning and then control and in the decision making as well, right? Because if we talk about this whole planning, control, and decision making, this is the structure basically, that we have over here. Okay, let me just, here we go. Yeah. Now, this planning, decision, and decision making and control is concerned basically. I mean, if we try to look at the hierarchy of the organization, we all know that we have three levels of organization. One is the strategic, one is the tactical, and then one is the operational. This planning is at the strategic level. This decision making is at the tactical level. This control is at the operational level. And this is where the whole management is concentrating at the end of the day. This, where there is the intersection between these three departments. At the strategic level, you are planning about the long term. Where do you want to have your organization or your business like after 15, 20 or so years, right? Tactical department or the tactical level do the decision making as in a context that what can be done in smaller achievable targets, what can be done in smaller achievable targets or goals or objectives that we can have, that when they are met, they are eventually towards as far as the fulfillment of the, the long term planning that the strategic level has. And then the control is at the operational level where they execute this, where they execute this idea. Like, for example, at the strategic level, while doing the planning, the board of directors decide that we want to have a 20% of the market share in, say, in case 5 years' time, right? I mean, we want to be the 20%, we want to be the 20% market holder or market shareholder for our product that we have in the market, right? This is what you are planning, say in case related to your business or what, right? And we want to have this target in 5 years' time. We want to have this target in 5 years' time. So this is what they have planned at the strategic level as the long term. Now, when this target is going to come down towards the, the tactical level where they have to make up the decisions, they are going to cut it down or they are going to divide it into the smaller achievable targets. First, they are going to divide it by 5 and they are going to get a growth of 4%. They are going to get a growth of 4% per year. So it means if you grow 4% per year, every year for 5 years, you'll be having a share of 20%. Simple, right? That if you grow by 4% every year, you will be able to achieve this target in 5 years' time, right? Now, this 4% is for 12 months, for a whole year. Now, let's say, obviously, they cannot pass it down to the control or the operational level like this, right? What they have to do is they are going to break it down into more achievable target, and that is when they are going to transfer this, as a short term goal or something, they are going to say that you have to grow by 0.33% per month. You have to grow by 0.33% per month, right? So if you are able to grow by 0.33% per month, eventually on a yearly basis, you will be able to grow by 4%. And now this is a per month. They are going to again break it down into the weekly and then daily targets as well. And those daily targets are going to be transferred to the control department or to the operational department, basically, who is going to work on a daily basis to meet the required target. Once they are meeting it daily, they are meeting it weekly, they are meeting it monthly, and then quarterly, then 6 monthly, and then eventually that per year basis, they will be meeting their targets. Now, the management accounting will come in a close monitoring position onto the control department as well, onto the operational department as well, where they are controlling it up. They will be having a close watch onto the operational level where they are working. And they will keep an eye that if our performance is according to the is up to the mark or not, is according to the required standard or not. And if there is some remedial action required or something, we'll be taking that action. We'll be doing that, execution as well, right? So this is what basically the overall the role is for the strategic level and all, right? Okay, I'm back. So let's resume now. Okay. Uh, when we move ahead from here, the planning thingy, next thing that we have over here is the data and information. Data and information. Data is the raw collection of facts and figures, right? And information is the process data into meaningful information, right? Information is processed data into meaningful information, that is called as the information. Then we have classifying data, and the classification, we have the primary data, and then we have the secondary data as well, right? Now, as far as the primary data is concerned, primary data is, it is the data that has been collected directly from the source. And then we have the secondary data, and the secondary data is, it is the data that has been collected from other than primary source. Done. Secondary data is, it is the data that has been collected from the other than the primary source. Okay, let's just talk about over here the data. Data is a raw collection of facts and figures. Like for example, um, we have maintained the customer files with us, customer's file, right? I mean, for example, we have the list of all the customers that we have with us. I mean, for example, in the file, we have all the name, the contact number, the detail, the email address, the postal address, and then the unique code that we have assigned to each customer as well. Similarly, we have the whole information regarding the preferred products that they want to have. Now, this is a big file that we have maintained for every customer. Or for example, we have an Excel file where we have maintained the data of each customer over there, right? Now, if the file contains the data related to each customer, that is going to be called as a data. Now, I ask my line, manager to go and bring me a list of all the customers that are on the southern side of my city, right? I can ask about this data, or saying case, we have the students data over here at the Hamzah Academy, right? I asked the coordinator to bring me the name and the WhatsApp number of all the students that I have in the section B of management accounting paper. See how precisely I'm asking about what I need. All the data of the students, the data which I want is the name and the WhatsApp number of all the students who have enrolled them in the section B of the management accounting paper for June 25 attempt, right? Now, from all the data bank where we have from paper F1 to P7, where we have the paper from F1 to P7, we have multiple batches for the level 1 and for the level 2 as well, and even for the level 3 papers as well. For the SPL and the SPR, we have 2 batches as well, right? And not for the end optional paper, we have the single batch for them. But apart from that, for every paper, we have 2 batches or 2 sections, right? So now if I ask about a particular thing that I want to have, The coordinator is going to process that data, the student data, and he's going to extract out the meaningful information that I need. See how the data is processed and meaningful information is extracted, right? So this is what the difference between the data and the information is. Classifying the data, we classify the data into the primary and the secondary, like, the data. The primary data is the data that you collect from the directly from the source. Like, for example, the companies conduct the surveys regarding their products directly from the customers. Like, for example, you must be having some sort of big stores or the grocery stores over there in the Mauritius as well, like the Best Buy or the the convenience store or the big Carrefour or the hypermarket or something, right? The big stores normally, like, you might be having, or some general store, you can say a big but bigger general store, basically, right? I'm giving you the example of the bigger store because normally the marketing staff, you can say, or the service staff is normally is present at the big stores, not at the smaller ones. Or let's just eliminate the, like, the physical staff. Let's say you normally get certain emails, from the brands, and they want to have a survey from you regarding the multiple products that you are using. Or normally you must have observed this as well, that normally when you call at the certain helplines, right, the recording always say that this call will be recorded for the quality purposes, right? And normally when we are done with the, the query or whatever the question or whatever the issue that we have with the relevant department, they say that please provide your valuable feedback regarding the call at the end of this whole conversation, conversation or the call, right? So before hanging up, an electronic voice asks from us that how was our experience with the call. I mean, if we call at the bank or we call at some customer helpline or the customer care helpline, na? So we get to have some, the surveys over there as well. We have the feedbacks directly from the customer, like, how the customer is rating our product or how the customer is rating our services and all. Na? So that is something which is called as the primary data, because we are getting the direct information from the customer. Like the staff representing the product at the aisles at the supermarkets, they are directly collecting the customers' information and asking about their review or their feedback regarding the product. That how do you like the product? How is your experience with the product? Any suggestions? How about the packing? How about the usage? How about the durability? And everything, ABCD, whatever the questions they have, they normally ask. So the data that they are collecting, that is the primary data, because that is directly collected from the customers. That is directly collected from the source, basically, right? And then we have the secondary data as well. Secondary data is where the information is extracted, or is not extracted, rather the information is basically taken from some other standard source. Like, for example, we are taking the data from, some government bodies regarding the GDP growth of a country. I mean, if you want to check, we rely on to the government department. Similarly, if you want to check the inflation rate, we normally check it with the government as well. Similarly, if you want to know about the weather or something, we have the local meteorological department. Similarly, we have some other apps as well which tell us about the weather conditions and all. Na? Like, for example, if we want to plan about a trip or something and we want to see that either it's going to rain or either it will be a sunny day, or how the weather is gonna be on a particular day, na? So we tend to rely on those apps, right? Because we don't have our own weather station or something which is going to help us to identify or to predict how the weather is going to behave and all, na? Right? Technically speaking. So that is the secondary source that we have, or that is the secondary data that we have. Then we have the sources of data with us. And if we talk about the sources of data, we have the internal source, and then we have an external source as well. Internal source, employees, management, production records, administration records, and then accounting records. These are all the internal sources. Similarly, media, government, customer, suppliers, bank, and then external shareholders. They are all the external ones, right? So these are the internal sources and these are the external sources. And then after this, we have attributes of good information, characteristics of good information. It has to be accurate, it has to be complete, it has to be user friendly, it has to be cost effective, it has to be relevant, reliable, timely, and communicated to the right person. These are the attributes of good information. The information has to be accurate. I mean, if you are getting some information, so technically speaking, it has to be accurate. It should not be wrong information, because if you want to rely on information by default, it has to be right. If it's not right, it's not accurate, then what's the point of having the information? Similarly, the information has to be complete as well. I mean, if you want to rely on it and you want to take an action according to it, it has to be complete. Incomplete information, sometimes leave you in no man's land. I mean, you are not sure about what to do. But practically, when you are getting some sensitive information or something, you might have to take up a decision earlier, because you can't wait for long as far as to get the whole complete picture or the complete information is concerned. Because if the information is something like time sensitive or something, right? You might have to act early onto it or something. So therefore, you might have to act early, and you might not wait, or you cannot, or it won't be able to, or you won't be able to wait completely to get the whole picture or the complete information is concerned, right? So technically you have to rely on it. And then the information has to be user friendly as well. I mean, you are getting the information, you are getting everything fine, agreed upon. But at the same time, it has to be user friendly as well. I mean, if you are getting the information, I mean, if it's not user friendly or something, the user to whom you are providing the information is not able to understand what the information is, or is not able to get the idea or the whole picture or something, then what's the point of providing him with the information is concerned. Like, for example, you are making a comparison between the sales of your multiple products over the 5 years, right? You are making a comparison of your sales of your multiple products over the 5 years, that how your sales trend has been. You make up the big paragraphs, the big tables, and you present this information to a non-financial management who is not expert in the financial and all, and you give this information to them, right? You have written accurate, 100% accurate paragraphs, the tables, you have made the tables as well, and you have presented your information, right? And that information is in English, which is understandable by the managers as well, but they are from the non-financial background. It will be really very difficult for them to understand that what you have done, rather than if you would have presented the information via a pie chart or a bar graph. Don't you think that it would have been more easily understandable by them? Yes. I mean, the use of the graphs, or the pie chart or the bar graph or something, it would have been more appropriate for them, and it would have been more easier for them to understand rather than reading the whole pages and then looking at the numbers and then comparing them on their own. It would have more easier if you would have had written the information like that, right? Similarly, this is very important point. I mean, in the whole of the management accounting, again and again, we are going to look at this point, and that is the cost effectiveness. Whatever information you get, whatever work you do, at the end of the day, it has to be cost effective. Cost effective means that its cost should be less than the benefit that it is going to provide. Its cost should be less than the benefit that it's going to provide. End of story. This is what the cost effectiveness is. If the cost of getting the information is higher than the amount of the benefit that it's going to get or give, then there's no point of having the information straight away. I mean, this is the rule of the management accounting, that if you have to spend more than what you are going to get at the end of the day, then there's no point of spending, right? So always keep this in mind, that the information, it has to be cost effective. The good information, it has to be cost effective. I mean, if it's not cost effective, then there's no point of having that information. Then why to spend more and all, nah? Right? So this is what the cost effectiveness is. Like, for example, I can give you the example over here. Say, let's say you are a sole trader and you have a small grocery store that you are running, and you are always over there from morning till the midnight onto the till, and you are working, and you have hired a boy to help you in your the business as well, right? Now, after a year, you spend 15,000 rupees, Mauritian rupees, on the audit of the superstore, for the inventory check, for the inventory count, and for the records as well. You spend the amount on to the audit to identify how the work has been. Now, you are the one who was managing everything, right? You ended up spending 15,000 to identify that the boy who was looking at the store, he was taking a candy every day of 1 rupee, and he used to eat the candy and did not put any money into the till. So technically, he ate 365 candies in the whole year, one daily, and did not pay for it. So technically, you identified that the boy had taken the candies for 365 rupees for which he did not pay. Now, you got this information by spending 15,000 rupees, right? I mean, what's the point of getting this information at the end of the day? I mean, had it been like some big fraud or something, then okay, fine. It seems logical that you saved yourself or something, now, because you are already managing the business. You are the one who's over there managing everything and all, now. So what's the point of having the audit at the end of the day? I mean, this is not going to give you any fruitful result or a fruitful information at the end of the day, right? Then second point is that the information, it has to be relevant as well. If the information is not relevant, if the information is not relevant, then what's the point of having the information over here? This is the point. Like, for example, mm, I'm just thinking about a layman example over here. Mm, I'm not, I have multiple examples in my mind, but I want to fit in something like, more appropriate. I mean, as far as it comes towards, as far as the information and everything is concerned. Like, for example, it's gonna be a sunny day. It's gonna be a sunny day tomorrow over here, in the city where I live, right? And for the next 10 days or something, there's no chance of rain over here as well, and it's going to be a proper sunny days over here, right? So this is the information which I give you. Now, this information which I gave you, it's accurate, it's complete, it's user friendly. I gave you for free. So technically the cost effectiveness is there. But is it relevant to you? I mean, you guys live in Mauritius, right? So I must have given you the information regarding the tropical island where you guys are living. That information would have been relevant, now. Because normally, like, out of the 365 days a year, if I say for at least 200 or 250 days, you guys get the rain. I mean, the rain or the frequency of the rain is really very high over there as compared to the here, right? This is something you guys might agree with me, right? And you guys always have a tropical weather over there, right? I haven't seen the weather going down even in the winter over there below 19 or something, 19 degrees centigrade or maximum 18 degrees centigrade is what you guys get. And the best part is the maximum temperature over there has been like around what, 30, 31 or something? Not more than that. Please correct me if I'm wrong, right? Normally, what I've heard and what I've seen the temperature being over there in this range. Now, this is the bracket range over there. So that is the best thing about you guys over there, and especially like the wind over there in the evening. Like that is the best thing which you like you normally enjoy over there, being there into the like the tropical island and all. No? So if I give you the information what is happening over here, or similarly, uh, may God help those who are like who are the factories and all. I mean, these days we are like reading in the newspaper and looking on online as well, as far as the LFI is concerned in the United States. Like so many of the homes, they have been destroyed by the fire and all, na? And it just looks like, god forbid, it just looked like a movie scene over there, like how the wind is gushing and all, and like how like the homes, they are just like um are being burned down and all and everything, na? So technically this is information as well. And over there we read about like a few houses over there which were secured. Like there was a house of some like some tycoon as well. Like it was untouched from the fire because technically that house was built with the brick and the cements. But the other houses mostly, they were from the wood, so that's why they couldn't stand a chance against the fire, and they just like went from the house to the dust like in no time, right? And overall we are getting this information and all, but that information is technically speaking not relevant to us in any regard, although that is the world information, fine. It's a good thing to keep yourself updated and all, na? But technically that information has nothing to do with us. I mean, let's just talk about from the business point of view. I mean, we can say that over there in the United States, there is a ban on like plastic shopping bags. In the United States, there is a ban on this like plastic shopping bags. Let's assume we have a ban over here in Pakistan as well, but that ban is not that effective. In normally big stores or something, you get to see this, but in the small shops or something, the plastic shopping bags are still being used, right? We have a ban over there. They have a ban over there in the US as well. But in Mauritius, I'm just giving an example. I don't know about there. But in Mauritius, saying case there is no ban. Now, you are a local vendor, you are a local manufacturer who deals within the Mauritius only, right? So, even if there is a ban in Pakistan, there is a ban in the US, it's not related to you, it's not relevant to you, because in your country there's no ban, right? There's no ban in your country, so this information is not relevant to you. We can say this one thing like that, that whatever the consumer laws or health and safety laws are over there in the US, same laws are being copy pasted in your country as well. Or if there is a change in law in the US, straight away that law is applied in your country as well. Let's assume. Then, in that case, if recently there has been a ban imposed on the plastic shopping bags in the US, now this is a relevant information for you because this ban is going to be implemented in your country as well. So now you have to take a corrective measure or a corrective action in order to deal with it, right? So that is how the information has to be relevant. Then obviously the information has to be reliable as well. The information, it has to be reliable as well. I mean, you have to check the source of your information, source of the information from where you are getting the information, that is it reliable or not, or can you rely on it or not, right? And then obviously timely, the information has to be communicated to the person in a timely fashion, because the timeliness is really very important as far as what the information is concerned. Like for example, you guys are having a class with me on Wednesdays, right? Now next week, you come from your office, you sit at your computer, you turn on and you log in your accounts, and then you're waiting and sitting for the class. The class starts at 7 a.m. Mauritius, right? 7 a.m. Mauritius time. 7 p.m. Sorry, 7 p.m. Mauritius time, right? You're sitting over there, and then from 7:10 or at 7:15, you get a message on the WhatsApp that from the coordinator from my side that I won't be able to take my class, right? You got the message on 7:15 after 15 minutes of the starting time of your class that there's no class today, right? Because of whatsoever the reason is. Now, what is the very first thing that will come to your in mind in your mind? Let's just have the filter over here. You don't have to share the very first things that you have in your mind, but still, ideally speaking, you will say, or you will think, at least you could have, or somebody could have informed us on time. Maybe you were doing some important task at your office, but you left it over there. Thankfully, thank you so much for my class, and you came over here, you sat and you were waiting, and then you got to hear this, that there's no class today. See, this issue, the timeliness. Similarly, you had to be somewhere, but you sacrifice that thing, and you prefer to be over here in the class, but on the, after 15 minutes or so, after wasting that opportunity to be somewhere, you were over here and then there's no class. Then automatically what you're going to think, that it's bad. I mean, you could have gone over there, you could have spent the time over there rather than being here. So see, this is how you start to think, right? And then obviously the information has to be communicated to the right person. I mean, say in case if I drop a message in my FR class, or I drop a message in my tax class, or I drop a message in my SBR class, that I'm not going to take my FA class next week, that I'm not going to take my FA class next week. Now, the information is accurate, complete, user friendly, cost effective, relevant, reliable, timely as well, but it's not communicated to the right person. You guys are from the batch B of the management accounting, not from the FA, right? So if I have not communicated it to you, if I'm communicating to you, you guys are not the relevant person. You are not the right person over here to talk about this, right? So this is one of the issues over here, right? Okay. Now, moving ahead from here, uh, we have to start our cost classification. Cost classification, we have production cost, that is, which is related to production or rendering of services. If it's related to production, then it's tangible. If it's related to rendering of services, it's going to be intangibles, right? Now, what is cost classification? What is production cost? Or what is this, tangible or intangible? We are going to talk about it right after the break, right? It's time to take a break, maximum 5 to 10 minutes, right? We are going to be back because it's time to stand up from our seats and just walk around a bit and then come back after 5 7 minutes or so. And then let's resume. Okay, let's have a break. Okay, I'm back. So let's resume. So we just started off talking about the cost classification, and we said we have the first thing over here in the cost form, and that is called as the production cost. And the production cost is something which is related to the production or rendering of services. If it's related to the production, then this is going to be related to the tangible items. And if you are providing services, then obviously this is going to be related to the intangibles, because the services that we provide, they cannot be seen, right? They can only be felt. So they are or experienced, right? So they are going to be called as the intangibles. Now, if you talk about the cost, the components of the cost over here in the management accounting, they are material mainly, labor, and then we have the expenses, right? Now, as far as the material is concerned, that is any tangible items cost put into produce the product or service. Like, for example, raw material, right? And then we have the raw material. Okay. Then we have the labor, that is the cost of conversion by human effort. It's called as the labor cost. And then we have the expenses, and the expenses are the cost which is not related to material or labor. Cost of renting the building, electricity, expenses, etc. So they are going to be over here in the form of expense. So material, any tangible items cost that is put in to produce a product or service, like for example, the raw material that we have, so that is a tangible one. Similarly, for the labor, that is going to be the cost of conversion by the human effort. And then we have the expense with us, and that is something which is the cost of not the material, not the labor, and that is something like, which is related to the solely and specifically something else, and that is some other form of the expense that you're incurring, right? Now, if I try to graphically present it, we have this, and then we have this over here, this over here, over here, and then here. So this is going to be production cost. This is the direct cost. Then this is the indirect cost. So basically, production cost is technically segregated between the direct and indirect cost. In the direct cost, we are going to have the direct material, direct labor, and direct expenses. Whereas in the indirect cost, we are going to have indirect material, indirect labor, and indirect expenses, right? Now, if we talk about the direct material, the material that can be seen or identified by naked eye in a product, right? That is called as a direct material. Whereas indirect material, the material which cannot be seen directly or identified in a product. Similarly, the material used as a support or not used directly in a product is called indirect material, right? So we have the differentiation between the direct and the indirect material as well. Now, the direct material is basically the material that can be seen or identified by looking at the product with your naked eye. I mean, this is the basic and the simplest example that you can have, or the definition that you can have for the direct material. I mean, if you look at a product and with the help of your eye, if in a one glance you are able to identify the material, that is going to be called as the direct material. Like, for example, the chair you are sitting on. Again, I'll give you the example of the chair over here. You can see the cloth. Under the cloth, you can easily see and feel the foam. Similarly, the iron stand is over there. Similarly, like, the iron frame or the iron stand, and then the wheels are over there, right? So these are the stuff that you can easily see with your naked eye, right? So that is something, you are going to call it as the direct material. Now, listen carefully. You saw the cloth over there. I mean, if you are sitting on a chair, just have a glance at it. Just look at it and try to identify the material. Cloth, the foam that is in there. Similarly, if we talk about the iron frame, the tires, right? Similarly, what else do we have? I mean, we do have that, some sort of a the board, we can say the chipboard or some plyboard at the back as well. I mean, when we are resting and we are sitting straight, the back side of the chair, it has inner plyboard inside it as well. So that is the direct material as well. Let's assume for the direct material as well. Right now, there are also indirect material within the product as well. Like, for example, the cloth, it is stitched. The thread that is used to stitch the cloth is the indirect material. Similarly, the iron frame or the iron stay, the iron frame, obviously it has been welded as well. I mean, it's not in a shape like that. Obviously, the iron, it was being melted. It was being molded, and then the parts they were being welded together as well. Nah? So the welding wire used in the welding, that's indirect material. Similarly, there can be some little screws or little nails over there in the chair as well, right? Similarly, where the tires are installed in your office chair, if you try to take out the tire, you will see that there's a small washer inside, the cylinder of the tire as well, which is locked together with the chair. I mean, the technicalities, if I talk about, right? If the technicalities, I mean, the structure wise, if I talk about, right? So there are lots of indirect material, within the product as well. Similarly, the table on which you have placed your laptop, I mean, if it's made of wood, if it's made of wood or the ply, obviously it's also going to have some screws. Obviously, it's going to have some nails in it. Similarly, there can be some sort of a taping around the border of the ply or the wood. That taping is done via the glue as well. Now, the glue that has been used, it cannot be seen or identified in the table, right? But that is the material over there which has been used as well, right? So the basic understanding is that if you are able to identify something in a product, that is going to be called as a direct material, and the one which you are not able to identify or something, that is going to be called an indirect material. But why? I mean, why to have such segregation, or why am I calling that the one that you can see is a direct and one you can see is no indirect? There is another logic behind it as well. In management of cost accounting, we call those material as a direct material whose cost can be attributed directly to the product. One. Secondly, we call those material as a direct material whose cost can be easily calculated for the per unit or per product basis as well, right? Like, for example, I have used the cloth in the chair. that cloths cost can be attributed and calculated on per share basis as well. Like for example, I used around 1 meter of cloth. So whatever the meter rate is, that is straight away going to be allocated to the chairs cost, right? If I've used 1 meter of cloth, or 1 meter of cloth has been used for, the chairs, for the chair purposes or whatever, that 1 meter's cost is going to be for the chair cost. Now, the thread which is used, I don't exactly, I tried, I had this thing in mind, but it just skipped. I wanted to search it to the Google to check the name for that. The thread, it comes in the smaller looms. I don't know what do we call it over here. You know, the smaller loom, the little one that we have normally, we have seen that in our household as well. Like, the sewing kit over here in the homes normally that we have. I mean, you ladies might be aware about that as well. The needle and the little thread that we have, like, to do some the sewing of the the shirt button or some whatever, the smaller things that we have to do. That's the smaller loom thingy. Maybe that's called a loom or something. I don't know. But try to get what I'm trying to say over here. That smaller loom or the small thread thingy that we have now. Uh, how much does it cost over there in Mauritius? Any idea? I mean, if any of the lady can give me an idea. Any one of you? I mean, if you are good enough with that, if anyone. I mean, I just need to know the cost over here. Please let me know. Anyone, if you guys are getting. I mean, the thread that we have with the needle at home for the little sewing purposes or for the emergency, 40 rupees approximately. It's that much expensive over there. I'm talking about the very smaller one that we have. 40 rupees in Mauritius means in Pakistan, that's going to be like around at what? I guess the exchange rate is like around for 4 or 5, it means like around 200 rupees. That much expensive? I mean, Yusuf, are you sure? I mean, any other lady over here, Miss Amira or anyone? Okay. Let me tell you about over here. In Pakistan, that is like around for around, I guess, 10 rupees or something. 10 rupees for the Mauritian is gonna be like around at what? I guess 25 pasas. 25 pasas. Let's assume that's for 1 rupee in the Mauritius as well. Let's assume that is for 1 rupee in the Mauritian, because that's not much. It's not costly. That is what I know. Now, if any one of you came across with that, have you ever tried to check its length? That how long is that? Like for around 100 meters, 200 meters, or what? Have you guys ever tested that? No, we haven't. Right? Now, how can you identify? How can you identify, or how can you check that what is the number of the chairs cloth that we can stitch with the complete one loom? The answer is going to be like around 10, 12, 20 chairs even as well. Now, imagine if we can do only 10 chairs and we have a cost of 1 rupee per loom. Now, the cost per chair that we are going to allocate is like around what? 10 pesos? Now, the 10 pesos cost as compared to the cloth's cost, that is like around 150 rupees or 200 rupees. That's very little, very minor, right? And it's not going to be easy for us to allocate, because if the stitching is done via some automatic machines or something, the output is going to be on the higher side. But if we have a tailor and he is doing the stitching on the machine manually, then the output might be lower because of the wastage of the thread and all. Similarly, the glue that we have, which we are using for pasting the wood or something, it normally comes into the smaller packings and into the packets as well. Now, how can we identify that how much of the glue is being pasted, in one table? In one table, how much of the glue has been used? How can we identify? Practically, it's not possible. Practically, it's not possible. We can have an estimate, we can have an idea, but talking about that, what is the exact amount or what is the exact cost, that's not possible. Because remember this qualitative characteristic over here, I highlighted it as well, the cost effective. Now you have to check that what is the cost per unit of that glue or the nails or whatever. Then how come this is possible for you to calculate the cost? Because the resultant answer is really gonna be a very low or little amount. So that is why we segregate the material into the direct and the indirect as well. And the direct material is the material whose cost can be directly attributable or attributed to the product. And the indirect material cost is not as such attributed to as far as the material is concerned, right? So that is what the direct and indirect material is. Then we have direct labor. Now, if we talk about the labor involved in the direct handling, manufacturing, or rendering of services is called as direct labor, and indirect labor is the labor working in supportive role, right? That's going to be called as indirect labor. Now, let's just go to a factory. The workers on the floor working the production line, manufacturing line, assembly line, they are the direct workers. Similarly, we have the cleaners, the sweepers over there as well, who are ensuring that the floor is clean, the area is clean. They are going to be in the indirect labor in the factory. Similarly, the labor who is responsible for cleaning and maintaining the machines are concerned, they are going to be indirect labor, because they are not involved into the production, they are involved with the taking care of as far as the machinery is concerned, right? So the direct labor who is directly involved, indirect labor who is at the back end, right? Then we have the direct expenses. Direct expense, the expense which are directly incurred because of production, the ones which are not material and labor, right? So the direct expenses are the expenses which are directly incurred because of the production, and they are the ones which are not material, which are not labor. They are going to be called as the direct expenses over here, right? Like for example, uh we are manufacturing a product, we got a customer's order, we are manufacturing the items which the customers have or ordered, and we need to have a specialized machinery to be used in the process of production. We don't have that machine with us, so we have to go and we have to get the machine on the rent, because we don't need the machine for the permanent purposes. It's just, these are just one of orders for which we at times require the machine, right? Otherwise, we are self-sufficient, we have all the machines that we need. But because of some unique orders, at times we had to have to get the machine on the rental basis and all, na? So the rent cost is now going to be a direct expense. Why? Because that cost is incurred over here, which is directly attributable to the production, because we are producing. So that's why we are incurring this cost. Otherwise, we won't have incurred this cost over here. Then, we can have some other costs as well, which are not normally direct, but which are related to the production and all, right? So they are going to be called as the indirect expenses. Done? I hope it's clear to you. Now, if I segregate this cost over here, this cost over here. We have production cost. We have non-production cost. Production cost is direct material, direct labor, direct expense. Similarly, it can be indirect material, indirect labor, indirect expenses, right? So the production cost is the direct cost and the indirect cost. So technically, if we add, okay, let me just graphically show you over here as well. Now, sum of all direct cost is called prime cost. Sum of all direct cost is called as prime cost. The indirect material, labor, and expenses, they are called as the factory overhead cost, right? And the sum of all direct, the sum of the prime cost and overhead cost, this all is going to be called as total production cost. Whereas in non-production cost, we have administrative cost, we have selling and distribution cost, and we have the finance cost, right? So the head office cost, that is the administration, right? So that cost that we are incurring, it has nothing to do with the production, that is going to be called as the administrative cost. Similarly, we have the logistics, we have the supply chain, some like arrangements and all those costs, the logistics and the supply chain, they are going to be called as the distribution cost. And then we have this finance cost, which is related to as far as financing with as far as the business as a whole is concerned, right? So that is the non-production cost. And over here, this one that we all have, this is the production cost that we have overall speaking. Done? Okay, now we are going to move ahead and we are going to talk about classification of cost according to organization structure. One, we have cost center. Cost center is the department of an organization that is responsible for incurring the costs only. So the department of an organization that is responsible for incurring the costs only, that is production department, marketing department, right? Or etc. They are the departments which are solely and explicitly responsible for incurring the costs. Then we have the revenue center. If you talk about the revenue center, that is the department responsible for generating the revenue only. For example, sales department, right? Revenue department is ultimately responsible for generating the revenue only. That is what we have. Then we have profit center. Any branch of business working independently, that is called as a profit center. Then we have investment center. I'm sorry it got disconnected. Let me just go back. We were over here and we were talking about this. Okay. So we were into the investment center over here. Investment center is the business as a whole. The business as a whole is going to be called as the investment center, right? So cost center, responsible for the cost only. Revenue center, responsible for the revenue only. Profit center, responsible for the cost and the revenue. That is the branch of the business. And then investment center, the business as a whole, right? Then moving ahead, we have cost behavior. Cost behavior is the way or pattern by which the cost changes as the level of activity changes. Cost behavior is the way or pattern by which the cost changes as the level of activity changes, right? Now, the level of activity, it can be volume of sales, volume of production, total number of labor hours, total number of machine hours, number of production runs, number of inspections, or whatever you want to add, you can, right? Whatever the level of activity you want to have, you can have in this, right? So it can be anything, right? Your cost behavior can be, I mean, if you want to have according to the volume of sales, so you are going to look at the cost, which costs change with what volume, or the number of production runs is like, how many setups that you do, according to which, like, the cost is changing or something, is increasing or decreasing, or whatsoever the case is, how the cost behaves, that is something which we are going to call as the level of activity, right? Now, the first type of cost that we have is called as variable cost. Ladies and gentlemen, this variable cost are the costs that increases usually by the same amount, for each additional unit of product that is made, or each additional unit of service that is provided, right? Now, variable costs are the costs that increases usually by the same amount for each additional unit of product that is made, or each additional unit of service that is provided, right? Now, variable cost is also called as the marginal cost. Variable cost is also called as the marginal cost. Okay. So, variable cost is the cost which changes with the volume of activity. Okay. And normally it increases as the volume of activity increases over here, right? So, this is called as the marginal. This is also called as the marginal cost, right? Like, for example, if I go over here, I can have my product over here. I can have my per unit cost. I can have number of units, and then I can have my total cost. Same case, I have a product X whose cost per unit is 5. I'm making 10 units. So over here, the cost is going to be 50. Then I'm making the cost per unit is what? 6. Number of units are 20. So 6 twos are 12. My cost is 120. Then I have a Z. The cost per unit is 7. Number of units are 30. And the cost is 210. Right? Okay. So this is how basically, like, I have the data available over here. Now, Now, okay, I want to merge. Now let's just go over here. This is product X, and then I have my cost per unit of 5, 5, and 5. Number of units of 10, 20, 30. Over here, I'll have 50. Over here, I'll have 100. And over here, I'll have 5 threes are 115. Yeah, 15 and 150 is going to be. Right. So now look over here. If I have a product X on per unit, the cost is same. 5 per unit, right? If I make 10 units, the cost is 50. I make 20 units, the cost is 100. And I make 30 units, the cost is 150. So what is happening? What is happening over here? Over here, if I look, I can simply say that my variable cost remains the same in per unit, right? My variable cost, it remains the same in per unit. And then if I talk about in total, so the total variable cost will increase as the level of activity increases, right? So technically, my variable cost will increase as the level of, come on. Okay, as my level of activity increases, this cost is increasing as well, right? Otherwise, if I look over here on per unit basis, it's the same, right? Okay. Then, if I go here and graphically, if I want to see, oh, not good. Okay. For example, if I have my graph over here, this is the volume, this is the amount, then I'm going to have a straight line over here. This straight line is, it says over, come on. Okay, it's not letting me type over here. Okay, one more thing I can do is erase. This is going to be variable cost per unit. Now I'm going to do the drawings. Okay, let's work the other way around, right? So this is volume, right? This is amount, and this is my variable cost per unit. Because variable cost per unit, it remains the same, right? And then if I go and I check from the total point of view, this is the volume, this is the amount. From the total point of view, it increases like this. This is not here, straight, right? Now, this is going to be uh, in total. In total, the variable cost will increase as the level of activity increases, right? So in total, this is a straight line. This is directly proportional to each other, right? So it's going to increase like this. Done? And then we have fixed cost. Now, fixed costs are the cost which remains the same regardless of the level of activity, and they remain the same during the same during a time period, right? So fixed costs are the cost which remains the same regardless of the level of activity, and they remain the same during a time period and all, right? So that is called as the the fixed cost. And if we talk about more over here, we call the fixed cost is also called as period cost. So we call the fixed cost as the period cost as well. For example, rental of a building at 40,000 per month. Rent of a building at 40,000 per month, that is going to be a fixed cost. No matter what we do, no matter we do the production, we don't do the production, we do the higher production, we do the lower production, or whatever, the building rent is going to be 40,000 per month, right? So it says the fixed cost are the cost which remains the same regardless of the level of activity. So it means so it means we have this volume, we have the amount over here, and we have this straight line. This is fixed cost in total, right? And then this and this, and then we have a volume, amount, and this. This is fixed cost per unit. That in per unit, it starts to decrease as the the volume increases. Like for example, I said earlier the rent of building is 40,000 per month. Right now, if 10,000 units are manufactured, the rent per unit will be 40,000 by 10,000, that is $4 per unit, right? Then similarly, if 20,000 units are manufactured, the rent per unit will be 40,000 by 20,000, that is $2 per unit. And then if 40,000 units are manufactured, the rent per unit will be 40,000 by 40,000 is $1 per unit, right? So if we look over here, gradually, see, gradually this fixed cost per unit is dropping over here. This cost is dropping over here, right? Okay, done. I hope it's clear. Now, moving it from here, next thing is we have semi variable cost or semi fixed cost over here. So semi-variable cost or semi-fixed cost. Semi-variable, semi-fixed cost is the cost that has the component of both the variable and the fixed cost. Like for example, graphically speaking, it's the volume here, it's the sine here, this is a straight line, the fixed portion, and this is the variable cost, which is increasing by the level of activity. We can give the example of the telephone bill over here, or we can give the example of the electricity bill over here, because the line rent and all, they are the fixed ones which we have to pay. So that is a fixed cost over here. And the number of units which we have consumed, that is going to be the variable cost over here, right? So this is a mixture of the the fixed and the variable cost, right? I hope it's clear. Then we have another type called as stepped fixed cost. Now, a stepped fixed cost is a cost which has a fixed cost behavior pattern within a limited range of activity and goes up or down in steps when the volume of activity rises above or falls below a certain level, right? So a stepped cost is going to be a cost that has a fixed pattern for a limited range of activity. And as soon as that range is burst, there is a step increase in the cost, which remains again same for another bit of level, right? And then again, it's changed, right? So basically, step fixed cost is going to remain fixed for a certain level. Then it again is going to suddenly increase for the next period, for the next range, and then it's going to remain fixed. Like for example, I mean, if I try to give you the graphical presentation, this is volume, and this is amount. So this. See? So shape is like a step. Now, for example, for 100 units, you have to spend $50 to get a warehouse, right? And that warehouse has a capacity of exact 100 units. So obviously, if you make one unit, you make 100 units, you need to have one warehouse, right? As soon as your production goes to or above 100 units, like 105, 110, 115, 120, or even 101, you need to have another warehouse where you can store the item. And that next warehouse will be used for another 100 units. Like, for example, over here, you have total 200 units. For this, you need another warehouse, which is going to cost you 50. So the total amount over here is going to be 100. Then, as soon as you go up from 200, you need another warehouse that's going to cost you 100. And over here, sorry, for another 100 units, you're going to have another warehouse that's going to cost you another 50. And that is going to be at 150 over here as far as for the units are concerned, right? So gradually you're going up, gradually your cost is going up in steps, right? Right? Your cost goes up, okay? So this is what I have for as far as the step fixed cost is concerned. Done? Okay, I hope it's clear. Now, moving ahead from here, the next thing which is in the pipeline now is the forecasting techniques. I mean, if I go up in the top, the nature, purpose, and sources of management information. This is what we were talking about over here today. This whole, area syllabus. The nature, purpose, sources of management information, what we have, and what do we call it as now. So this is what we have over there, right? And now, data analysis, first thing, the forecasting techniques that we have. So for this, we can have four areas, right? And here, 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 and here. So we have time series analysis. We have regression analysis. We have the examiner's favorite high-low method. And then we have index numbers, right? And this forecasting means to predict, right? Forecasting means to predict basically, right? And organizations have to predict about their costs and revenues. So the organizations, they have to predict about their cost and revenues. Now, this forecasting technique is something which we are formally going to start from our next class because we don't have much of a time over here or something. So we are not going to go into this, but I've just written it over here that this is going to be our next topic, right? So I'm going to stop over here for the day. I hope you guys had a good understanding. Now, if you guys have any question or something, please feel free to ask me. I'll be more than happy to assist you and guide you in that. Any question, anyone? Okay, you guys have to be responsive and you have to tell me, okay? And apart from that, I would like to have your suggestion and opinion as well regarding today's class. I mean, if you think that we should incorporate some other factor or some other way or something, I would love to know about that, right? As far as the doing the questions from the exam kit is concerned, obviously I understand about this, but technically we had the whole theoretical area over here today, right? I mean, I'm trying to build your base over here, so I'll be requiring one or two lectures to build your proper base over here. Then we are going to jump towards as far as doing the practice is concerned, right? So that is something which I already have in my mind. Done? Now, any question, anyone? Come on, I'm waiting. Miss Amira? We have the Karu over here as well. And then Pagoa. Okay. Vidad, Yusuf. Any question, guys? I'm still waiting. Okay. So by silence, what should I assume? It's all good. At least be responsive so that I know. Okay. All good. Okay. 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 Okay, Mr. Media saying all good, and she'll let me know. Okay, done. So thank you so much for joining today. Definitely next week we are going to meet at the same place, same time, same channel. And the topic next time is going to be for the forecasting techniques from which we are formally going to start, and then we'll do some number crunchings as well. So till then, just enjoy and take care of yourself, your family, your friends, and the people around you. Until we meet again, it's time to say bye. Take care. Bye bye.